Hi, in this video we are going to solve the Mumbai University question paper of April 2016, class TYBcom, semester 5, subject financial accounting. So let us understand the first question. Rupa Limited took over the business of Sonali Limited as on 1st April 2015 at book value. Following is the summarized balance sheet of Sonali Limited as on 31st March 2015. This is your liability side. Asset side. Liability side, you have 80,000 equity share of rupees 10 each, 8 lakhs. General reserve 4 lakhs. Profit and loss account 2 lakhs. Creditors 2 lakhs. On the asset side, you have plant and machinery 5 lakhs. Furniture and fixture 4 lakh 50,000. Motor vehicle 1 lakh. Investment 1 lakh. Stock 1 lakh. Dated 2 lakh. Cash and bank balance 50,000. Preliminary expenses 1 lakh. Rupa Limited issued one equity share of rupees 10 each at a premium of rupees 2 per share for every share in Sonali Limited. Now, what is important actually over here is Rupa Limited issued one equity share of rupees 10 each. So you will have to underline this whole thing. Rupa Limited issued one equity share of rupees 10 each at a premium of rupees 2 per share for every share in Sonali Limited. So with the help of this we will be able to calculate purchase consideration. Fine, because Rupa Limited is taking over the business of Sonali Limited. So against this, Rupa Limited is giving one equity share of rupees 10 at a premium of 12 for every share of Sonali Limited. So the ratio will be 1:1. Okay. Calculate purchase consideration and also prepare balance sheet of Rupa Limited after acquisition. Fine. So we will have to calculate purchase consideration as well as we will have to prepare balance sheet of Rupa Limited after acquisition. Acquisition is in the nature of purchase. So let us start. You can see solution, purchase consideration, 80,000 equity share because the ratio is 1:1. So Rupa Limited is going to give 80,000 equity share to the shareholders of Sonali Limited. By the way, what is the name? To the shareholder of Sonali Limited of rupees 10 each at a premium of 2 per share. So 80,000 into 12, you will get 9,60,000. You can calculate on your own. 80,000 into 12, you will get 9,60,000. So the amount of purchase consideration is 9,60,000. So this is the balance sheet of Rupa Limited as on 31st March 2015 after acquisition. Particular note number rupees. Let us start. So first we will say equity and liabilities. And this first will be shareholders fund. And this A will be share capital. So for share capital we will say we will give note number 1, B, reserves and surplus. For reserves and surplus we will give number 2. Then second, current liabilities. Okay, so and this A, trade creditor. We will number this as 3. then second, assets. In this first, non current asset. And this A will be fixed asset, for which we will give note number as 4, and B non-current investment, note number will be 5. Then second, current assets, A inventories, note number will be 6. B trade receivable, note number 7. C cash and cash equivalent, this will be note number 8. Okay, here after trade creditor we will take total. Same way here after cash and cash equivalent also we will take total. Fine. So notes, we can take this little up. Let me select all. We will take this little up so that we get space below. Okay, now notes to account. In this first, as we said, first will be let's check note number 1 for it. First one is share capital. So first share capital, under this issued and subscribed, we will say 80,000 equity shares of rupees 10 each. So as there is only one item, we can take this in the outer column directly, right? Second note is regarding reserves and surplus. So under this, the first item that we are going to take, yeah. Now what will come here, as we are preparing the balance sheet of Rupa Limited, that too after acquisition. So if you see, the share capital is issued at premium. You can see this. Rupa Limited has issued 80,000 equity share of rupees 10 each. So 80,000 into 10, that is 8 lakh will be your face value or share capital, you can say. and premium of rupees 2 per share, that means 80,000 to 2. So 1,60,000. 1,60,000 will be your security premium. So security premium will come under the head reserves and surplus. Fine. So we will record security premium here. So first we will say security premium we will show the calculation also. 80,000 into rupees 2 per share. So your security premium will be 1,60,000, right? And B, we will say yeah. Now one thing is important, like working note. So let me show you. There is one more thing which will come under the head reserves and surplus. And what is that? See, what is the value of net asset taken over? What is the value of net asset taken over? Now how to get that net value of net asset taken over? You can see the balance sheet. Plant and machinery, all assets and liabilities are taken over. Okay, so in that plant and machinery of 5 lakh, in short we can do one thing. If you see, plant and machinery is taken, furniture and fixture is taken, motor vehicle, investment, stock, data, cash in bank, all these assets are taken except preliminary expenses. So 16 lakh minus 1 lakh, 15 lakh ka assets are taken over by Rupa Limited, and liabilities mein only creditor, that is 2 lakh. 15 lakh of asset and liability of 2 lakh. So net asset, let us calculate net asset as I was explaining you. So we will say 15 lakhs minus 2 lakhs, right? So that will be 13 lakhs. Let me take this here. $13 lakhs. From this we will have to subtract purchase consideration, and purchase consideration is, as we calculated initially, 9,60,000. So once you subtract this, you will get whatever balance you get, that you will have to transfer in capital reserve. So your capital reserve will be 3,40,000. Okay, so what exactly is this? What do you mean by this actually? See, let me explain you. The value of the asset as on that date was 13 lakh, right? And you paid only 9,60,000. So this 3,40,000 is the benefit which you are getting. Okay, so that benefit you can transfer under the head reserves and surplus. It's a kind of reserve which you can utilize in the future. Fine. So now let us record this capital reserve. Capital reserve. So just now we got this capital reserve as 3,40,000. So if you take the total of this, you will get 5 lakhs, right? 1,60,000 plus 3,40,000 will give you 5 lakh rupees. Now third heading, trade payables is our third note. Okay, so in that we will write creditors, and the amount of creditor is you will have to check from the question. The amount of creditor is 2 lakhs. So directly we can write in the outer column, as we have only one item, 2 lakhs. Next, fourth, we have fixed assets. Okay, so if you see the question, we will have to record all the assets. So let us see the question. Plant and machinery 5 lakh, furniture and fixture 4 lakh 50,000. So if you take the total of this, it will be plant and machinery 5 lakh, furniture and fixture 4 lakh 50,000, motor vehicle 1 lakh. So let us record this. Plant and machinery, $5 lakhs. Furniture and fixtures, 4,50,000. Motor vehicle, it is 1 lakh. So if you take the total of this, you will get 10,50,000. Right? Now next one, fifth note. So fifth note is non-current investment. Under this we will record investment. So as we have only one item, we can record directly in the outer column. Let us see the amount of investment. So the amount of investment is 1 lakh rupees. We can go and record here. ₹1 lakh. Next, fifth note. Sorry, the previous was fifth. Now this is sixth. Sixth note, inventories, and in that we are going to take only one item, that is stock. So let us see what is the amount of stock. Stock is 1 lakh rupees. So we will record 1 lakh rupees. Fine. Then seventh, trade receivable. And in this we will record the amount of data. We will have to check the amount of data from the balance sheet. of Sonali Limited. So the amount of debtor is 2 lakh rupees. (2 lakh). 8th, cash and cash equivalent. In this we will record cash and bank balance. Let us go to the balance sheet and check the amount of cash and bank balance. It is 50,000. So we will say $50,000. Fine. So our notes payable is notes to account is ready. Now just we will have to put the value in the solution in the balance sheet of Rupa Limited. So share capital, as we saw, the amount of share capital is 8 lakh rupees. Fine. Then the amount of reserves and surplus is 5 lakhs. So if you take the total of this, you will get shareholders fund, which is 13 lakhs. Then trade creditor is 2 lakhs. So now if you take the total, you will get the total. So find out the total. So total is 15 lakhs, right? We got the total as 15 lakhs. Same way, let us see the asset side. Asset side, we have fixed asset. We got a fixed total of fixed asset as 10,50,000. Then non-current investment we got as 1 lakh. So if we take total of this, we will get 11,50,000. Right? Then inventories is 1 lakh. And trade receivable is 2 lakhs. Then cash and cash equivalent 50,000. So again, if you take the total of current asset, you will get 3,50,000. Now again you take the total. Total of liability side. So see how much you are getting. That is 15 lakhs. So your balance sheet is tallying by 15 lakhs. Fine. So this is how you have to solve this sum in the exam. Now let us go for the next question. Second question. Madhu Limited took over Rakhi Limited on 31st March 2015. On which day the summarized balance sheet of Rakhi Limited was as follows. Summarized balance sheet as on 31st March 2015. Liability side, equity share of rupees 10 each, 10 lakh rupees. 5% preference share of rupees 100 each, 4 lakh. Creditor 1 lakh, bills payable 60,000, goodwill 60,000 on the asset side, cash and bank balance 80,000, inventory 3 lakh 10,000, plant and machinery 4 lakh 10,000, data 1 lakh 10,000, land and building 5 lakh, preliminary expenses 35,000, profit and loss account debit balance 55,000. The business was taken over by Madhu Limited on the following terms and condition. Fine. What are the terms and conditions? First, for every 10 equity share of Rakhi Limited, Madhu Limited issued 11 fully paid equity share of rupees 10 each and paid rupees 15 in cash. Oh, so what exactly is this? What is important over here is, for every 10 equity share of Rakhi Limited, Madhu Limited issued 11 fully paid off equity share of rupees 10 each. So if we do the calculation will be something like this. For every 10 equity share, okay, against every 10 equity share you are giving 11 shares. So if right now you are having 1 lakh equity shares, because right now if you see the summarized balance sheet of Rakhi Limited, it is 1 lakh rupees. So for 1 lakh rupees, okay, for 1 lakh shares, how many number of shares you will give in the new company? Okay, so it is just a cross multiplication. So if you cross multiply, the answer will be 1 lakh into 11 divided by 10. 1 lakh into 11 divided by 10. That will give you 1 lakh 10,000 equity shares. Okay, and you are issuing at the rate of rupees 10 each. Fine, so this thing we'll have to remember. So that means you are giving 11 lakh rupees. 1 lakh 10,000 equity share at the rate of rupees 10 each. Fine. Now what is the next thing? They are saying paid rupees 15 in cash. So what they are saying, for every 10 equity share of Rakhi Limited, you are paying rupees 15 in cash. So let us do one more calculation. For every 10 equity share, you are paying rupees 15. Right now you have 1 lakh shares. So for 1 lakh shares, how much rupees are you going to pay in cash? So the answer will be 1 lakh into 15 divided by 10. So that will give you, we calculate 1 lakh into 15 divided by 10. So that will give you rupees 1,50,000. Fine. So 11 lakh you are giving shares plus 1,50,000 cash. So this cash is in addition to this shares. So this thing we'll have to remember. What else? Second, preference shareholder of Rakhi Limited were paid equal number of 6% preference share of rupees 100 each by Madhu Limited at a premium of 8%. You will have to underline premium of 8%. You will have to underline 6% preference share. Okay. So right now Rakhi Limited is having 5% preference share of rupees 100 each. So against this you are giving 6% preference share of rupees 100 each. The amount will remain same. It will be 4 lakh rupees only at a premium of 8%. So it's very simple. At a premium of 8%, that means you will have to find out the number of shares. Number of shares will be 4 lakh divided by 100. It will be 4,000, or you can directly calculate 8% of 4 lakh, so it will be 32,000. So the total amount that you are going to give to the preference shareholder of Rakhi Limited is 4,32,000. Fine. All assets and liabilities were taken over at book value except cash in bank to the extent of 14%, which was left for meeting realization expenses. So all the assets like goodwill, cash and bank balance, inventory, plant and machinery, debtors, land and building, all these assets you are going to take over except cash and bank balance of 14,000, because you are going to meet realization expenses with that 14,000. So this thing we'll have to remember. And liability may you are going to take creditor and bills payable. These two liability you are going to take over. You are required to A, calculate purchase consideration. Fine. So the first thing that we are going to calculate is the purchase consideration. B, prepare necessary ledger account to close the books of Rakhi Limited, assuming acquisition is in nature of purchase. Right. So we will have to open few ledger accounts in the books of Rakhi Limited. So let us prepare. The first thing that we are going to calculate is purchase consideration. Solution. First, we will say calculation of purchase consideration. Right. So you have given equity share of your company Madhu Limited, equity share in Madhu Limited. So it will be 1,10,000 equity shares of rupees 10 each. So that will give you 11 lakh. Then second, payment in cash. So that also be calculated, and we came to know 1,50,000 is to be paid in cash, and then %6 preference shares in Madhu Limited. So we will say $4,000 preference shares of rupees 100 each at a premium of 8%. So in this, the amount of preference share capital will be 4,000 into 100, so that will be 4 lakh rupees, and to this you will add premium, which is 8% of 4 lakh. So that comes to 32,000. So total of this will be 4,32,000. Fine. So the total you can say the total purchase consideration will be 11 lakh plus 1,50,000 plus 4,32,000. So that gives us 16,82,000. So we will write 16,82,000. So this is our total. Okay. Now the next thing that we are going to calculate is we are going to prepare ledger account. We will say ledger of Rakhi Limited. So in this, see, you are preparing the ledger account in the books of Rakhi Limited. So Rakhi Limited is acquired by Madhu Limited. So the first account that you are going to open here is a realization account. So let us prepare the realization account. Okay, so this is our realization account. So our realization account is ready. Then we will have to prepare equity shareholders account. Let us prepare equity shareholder account. So my equity shareholder account is ready. I will name this as equity shareholders account, right? After this, I'm going to prepare preference shareholder account. So my preference shareholder account is also ready. Let me name this as preference shareholder account. So the next account that I'm going to prepare is Madhu Limited account. So let me prepare Madhu Limited account. Madhu Limited account. So our Madhu Limited account is also ready. Next will be equity share in Madhu Limited account. So my equity share in Madhu Limited account is almost ready. I'll have to just name it as equity shares in Madhu Limited account. Perfect. Then next will be 6% preference share in Madhu Limited account. That is also almost ready. Madhu Limited, equity share in Madhu Limited. Okay, so this we will name as 6% preference shares in Madhu Limited account. So this account is also ready. And the last one which I am going to prepare is cash account. So I will say cash account. So my cash account is also ready. So this many ledger accounts we will have to open. Fine. Okay. Now let us see the question. Equity share of rupees 10 each 10 lakh. We have opened equity shareholder account, right? So we will have to transfer this 10 lakh rupees in equity shareholder account. So we will say by equity share capital account. Fine. Next is 5% preference share of rupees 100 each. So this we will have to transfer in preference shareholder account. Credit side by preference share by the what's the percentage? 5%. 5% preference share capital account, and the amount is 4 lakhs. Next, creditor 1 lakh and bills payable 60,000. We will have to transfer in the realization account credit side. So let us go and record in the realization account credit side. So we will say by creditors as 1 lakh by bills payable 60,000. Fine. What next? So liability side done. Asset side, goodwill 60,000, cash in bank 80,000, inventory 3,10,000, plant and machinery 4,10,000, debtors 1,10,000, land and building 5 lakh. All these assets will go in the realization account debit side. But remember one thing, cash and bank balance you will have to split actually, because 14,000 is towards meeting the realization expenses. Okay, so we will have to split this 80,000. We will have to subtract 14,000 from this 80,000. So let us do that. Take all the assets on the debit side of realization account. So we will say to goodwill $60,000, to cash 80,000 minus 40,000, it will give you 66,000. Then to cash again, this is for expenses, meeting the expenses 14,000, right? Then to inventory 3,10,000, to plant and machinery 4,10,000, to debtors 1,10,000, to land and building 5 lakhs, to cash account, to, is there anything left after land and building? No. So this thing is done. Now one thing which is important over here is like we have opened cash account, so we will have to give the effect of this to cash into cash account as well, right? So let us go to the cash account. So this is our cash account. First of all, we will record the opening balance of cash. So we will say to balance brought down, it will be 80,000, right? And then credit side we will record by realization account the second effect of 66,000. Same way, second effect of 14,000 by realization account, 14,000. Fine. So we have given the second effect of both. $66,000 as well as 14,000. So we don't have any other account, right? So this is how we were able to complete the liability side as well as asset side, except preliminary expenses and profit and loss account. So this preliminary expenses and profit and loss account we will have to transfer in equity shareholders account. Okay, equity shareholder have to bear this expenses or losses, right? So let us go and record in the equity shareholder account debit side. So we will say to preliminary expense account, this 35,000. Then we will say to profit and loss account, it will be 55,000, right? So now we can say we have covered the liability side as well as the asset side of all the items of liability and asset. Now let us see the additional information part. The business was taken over by Madhu Limited on the following terms and conditions. For every 10 equity share of Rakhi Limited, Madhu Limited issued 11 fully paid equity share of ₹10 each and paid 15 in cash. Right. So now we will have to give the effect of both. First, Rakhi Limited is getting, the equity shareholder of Rakhi Limited are getting the equity shares of Madhu Limited, right? So the entry will be equity shareholder account debit to equity share in Madhu Limited account. So let us go to the equity shareholder account debit side. And record to equity shares in Madhu Limited account. The amount is 11 lakh. Fine. Now we'll have to give the second effect of this because we do have equity share in Madhu Limited also. So let us give the second effect in the credit side of equity share in Madhu Limited account. So we have equity share in Madhu Limited account. We will say by equity share equity share holders account. Amount will be 11 lakhs. Fine. Let us see the next information that we have. You are paying 1,50,000 in cash. So equity shareholders are getting 1,50,000 cash as well. So let us go and record in the equity shareholder account. So your entry will be equity shareholder account debit to cash account. $1,50,000. Fine. Now you'll have to give the second effect of this in the cash account credit side. So let us go to the cash account. So this is our cash account credit side. We will record by equity shareholder accounts. It is 1,50,000. So let us record 1,50,000 on the credit side. So we have given the two effect of cash as well. Let's see the question once again. So the first information we have posted the entries of the first information. Let us go for the second one. Preference shareholder of Rocky Limited were paid equal number of 6% preference share of ₹100 each by Madhu Limited at premium of 8%. So we will have to record this like in the preference shareholder account. So let us go and record in the preference shareholder account. So this is our preference shareholder account, right? Let me write 5% preference shareholder account. Yeah. Now you are giving what you are giving actually you are giving 6% preferential capital in Madhu Limited account. So we will have to record that in the debit side. To 6% preference shares in Madhu Limited. So it will be like we have already calculated. You are giving 4,32,000. Now you will have to give the second effect of this in preference shareholder, 6% preference shareholder in Madhu Limited account. So we'll have to go to 6% preference shareholder in Madhu Limited account. So this is our 6% preference shareholder in Madhu Limited account. So credit side you will record by 5% preference shareholder account, and the amount will be 4,32,000. Done. Let's see what is next in the question. All assets and liabilities are taken over except 14,000. That is fine. We have given the effect of this as well. Now we'll have to close the accounts. So we will close equity share in Madhu Limited account. So let us close this account, equity share in Madhu Limited account. So we are getting total as 11 lakh. Fine. 11 lakh as total. Whatever balance you are getting, you will have to transfer in Madhu Limited account. So the balance which we are getting is 11 lakhs. You will have to circle this balance, 11 lakh. Now you will have to give the second effect of this in Madhu Limited credit side. So we will say buy equity shares in Madhu Limited account, $11 lakh. Fine. Same way you will have to close 6% preference share. So let us close 6% preference share in Madhu Limited account. So here also we are getting total as 4,32,000. Same total we can write here. Now same way, whatever balance you are getting in 6% preference share hold in Madhu Limited account, you will have to transfer in Madhu Limited account. So we are getting balance as 4,32,000 only. Again, as this is your balancing figure, you will have to circle this, and you will have to give the second effect of this in Madhu Limited account. So we will say buy 6% preference share in Madhu Limited, 4,32,000. And then next you will have to close is the cash account. Let us find the total. So 66,000 plus 14,000 plus 1,50,000, we are getting 2,30,000. So 2,30,000 is the total. Same total we'll have to record on the debit side, and we will have to subtract 80,000. So 1,50,000 is the balance in the cash. So this also we will have to transfer in Madhu Limited account. So the balance which we are getting, we will record here 1,50,000. And as this is your balancing figure, you will have to circle it. And same way you will have to transfer this into Madhu Limited account credit side. So we will say buy cash account 1,50,000. Now you will have to close Madhu Limited account, and whatever balance you get, you will have to transfer in realization account. So let us close Madhu Limited account. $11 lakh plus 4,32,000 plus 1,50,000, 16,82,000 is the total. Same total we will have to record in the debit side. Fine, and we'll have to write the balance over here. So we will have to transfer the balance in the realization account to realization account 16,82,000. Now whatever balance you are getting, you will have to, as I said, transfer into realization account, and you will have to circle it. Now we'll have to give the second effect of this in the realization account credit side. So let us go to the realization account. This is our realization account, and as you can see, 16,82,000 is the purchase consideration. So we will record here by Madhu Limited account. This is our purchase consideration. So the amount of purchase consideration is 16,82,000. Fine. So we have closed Madhu Limited account, equity share in Madhu Limited account, 6% preference share in Madhu Limited account, cash account. Now the next account that we are going to close is 5% preference shareholder account, right? So let us close this as well. $4,32,000. Debit side is more. So the balance which we are getting in 5% preference shareholder account, we will have to transfer in realization account. So we are getting 32,000 as balance. Again we will have to circle this balancing figure. Let us transfer in the realization account, debit side. So we will say to preference share holders account 32,000, right? Now we will have to close the second last account, that is realization account. So let us close this as well. And we can see 5, 4, 9, 10, 13. Credit side is more, so let us take the total of credit side. 16,82,000 plus 60,000 plus 1 lakh. 18,42,000 is the total. 18,42,000. Same total we are going to record here. $18,42,000. Okay, and now we will have to find the balance in the realization account, and that balance we will have to transfer in equity shareholders account. That will be the profit which we are going to transfer in equity shareholders account. Okay, so let us calculate 18,42,000 minus 60,000 minus 66,000 minus 14,000 minus 3,10,000 minus 4,10,000 minus 1,10,000 minus 5 lakhs minus 32,000. So that will give you, there was some mistake, let me calculate once again. 18,42,000 42,000 minus 60,000 minus 66,000 minus 3,10,000 minus 4,10,000 minus 1,10,000 minus 5 lakhs minus 14,000 minus 32,000. So that is giving me 3,40,000. Okay, so let us record here 3,40,000, and as this is our balancing figure, again we will have to circle this, and you will have to give the second effect of this in the equity shareholder account. So we will say by realization account $3,40,000. Now we will have to close equity shareholder account as well. So if you see debit side, it is 35,000, 55,000, 11 lakh, 1,50,000, 13,40,000 is the total amount, and credit side also we are getting same. So we can record that, and this is how we will have to solve this sum. You can do one more thing. You can close equity shareholder account first, and whatever balance you get, you can transfer. Like you will get balance as 3,40,000. You can transfer this here in realization account. Okay, and then you can tally the realization account. Fine. So we have completed this sum. Let us go for the next question. Okay. Following is the trial balance of Gopal Limited as on 31st March 2015. Particular debit, asset, credit. There is some mistake in this. It's actually this is your asset side, this is your liability side. Asset side, let's read all the assets. Stock at cost 10 lakhs, fixed asset net block 24,70,000, sundry debtor unsecured and goods 8 lakhs, staff advance short term 1,70,800, cash in hand 1,20,000, bank balance 9,88,000. Preliminary expenses 53,200, 200, amortizable within 12 months. Advance tax 24,000, bills receivable trade 1,16,000, investment at cost long term 1,50,000. Credit side, share capital equity share of rupees 100 each 40 lakhs, general reserve 1,40,000, loan from IDBI long term 6 lakhs, provision for taxation 20,000, net profit for the year 5,40,000, profit and loss account opening balance 2 lakh, unsecured loan long term 1 lakh rupees, sundry creditor 2,80,000, unclaimed dividend 10,000. Okay. Additional information: transfer to general reserve 1 lakh, director's recommendation 6% dividend. So you will have to calculate 6% on 40 lakhs. Out of debtors debts due for more than 6 months were rupees 1,04,000. Sundry creditors include creditor for goods 2,10,000, while the remaining are for expenses. Loan from IDBI is secured against stock. Market value of investment is rupees 1,56,000, while its face value is 1,10,000. Ignore previous year's figure and corporate dividend tax. Prepare balance sheet of Gopal Limited as on 31st March 2015 as per the provision of Companies Act. So we'll have to prepare the balance sheet as per the Companies Act 2013. That means we'll have to follow the format of Companies Act 2013, right? So let us go for the solution. Solution. Gopal Limited balance sheet as on 31st March 2015. Let me take this little up. We will prepare balance sheet as per Companies Act 2013. Particulars. Note rupees and rupees. Okay. So as per the format, the first thing that we are going to take is equity and liabilities. And in this first will be shareholders fund, and this A, share capital. So note number 1 for share capital. B, reserves and surplus. Note 2, second, long-term borrowings. Will give as note 3. Third, current liabilities, and this A, trade payables. Note number 4, other current liabilities. Note number 5, short-term provision. Note number 6, and then total. Now second, assets. And this first will be non-current assets, A, fixed assets. To this we will say note number 7, B, non-current investments. Note number 8, second, current assets. In this A, inventories. We will say note number 9, B, trade receivables. Note number 10, C, cash and cash equivalent. Note number 11, D, short-term loans and advances. Note number 12, E, other current assets. Note number 13, and finally total. Right? Now we'll have to prepare notes to account. Notes to accounts. So for this we are going to prepare only 2 amount columns. Particulars, rupees and rupees. So our first note, share capital, and this issued and subscribed. We will say 40,000 equity share of rupees 100 each. So as we have only one amount, we can take this in directly in the outer column. 40 lakhs. Second, reserves and surplus. And this first will be general reserve, which will be 1,40,000 given in the information, additional information. Add transfer one lakh. Right. So the total of this which you will be getting is 2,40,000. To this you will add the second one, which is profit and loss balance. But for that you need calculation like there is an opening balance in profit and loss account. So you will have to take that first, opening balance. So opening balance in profit and loss account is 2 lakhs. You will get this in from the question. Add net profit for the year, that is 5,40,000. Less transfer to general reserve, it is 1 lakh, less proposed dividend on share capital at the rate of 6%. So that will give you 2,40,000. So if you do all this calculation, let me do 2 lakh plus 1,40,000 minus 1 lakh minus 2,40,000. So we are getting 4 lakh, and this 4 lakh is your surplus, right? So two lakh plus 4 lakh, whatever balance you are getting, 2,40,000 plus 4 lakh, whatever balance you are getting, you will have to take in the outer column. So we are getting 6,40,000. Right? Now we'll go for the next one. Third note. So the heading of third note is long-term borrowings. And this first we will take secured loan from IDBI. We will write in the bracket as it is given in the additional information, secured against stock. It is very important for you to write in the bracket Thus you will have to show it to your stakeholders. So it is mandatory for you to disclose it. So secured loan from IDBI is 6 lakh rupees, and then unsecured loans, it is 1 lakh rupees. Now if you take the total of this, you will get 7 lakhs. We'll go for the fourth one. Fourth is trade payable, and in this we will take sundry creditors for goods, because you have sundry creditor for expense as well. So sundry creditor for goods is 10,000. So that we will take directly in the outer column. Fifth, other current liabilities, and in this you are going to take creditors for expenses, which will be 2,80,000. Total creditor minus creditor for goods, which is 2,10,000. So we will get creditor for expenses. So it will be 70,000. Then unclaimed dividend, $10,000. Okay. Let me take this little up. Fine. So now the next total of this we will have to take in the outer column. So as we are getting total as 80,000. Other current liabilities, let me continue here. Okay, so continuation, the next part, the sixth, short-term provision, and in this we are going to take proposed dividend. As we have already calculated the amount of proposed dividend, what is 2,40,000. Seventh, tangible fixed asset, and this we will take fixed asset. Net block, 24,70,000. Eighth, non-current investment. In this we will take investment at cost or market value. This is just an information which you will have to record in the balance sheet. Is rupees 1,56,000, and face value is rupees 1,20,000, but the cost of this investment is 1,50,000. Ninth, inventories. In this we will take stock at cost. So it is 10 lakh rupees. Then 10th, trade receivable. And this first we will take sundry debtors due for more than 6 months. $1,04,000. B, other debtors, unsecured and good. So it will be 8 lakhs minus 1,04,000 due for more than 6 months. So 8 lakhs minus 1,04,000, it will be 6,96,000. So if we take total of this, it will be 8 lakhs. Right? And here only we will have to record bills receivable. Okay, so the amount of bills receivable is 1,16,000. Now if we take total of this, we will get 9,16,000. We'll go for the next one. Cash and cash equivalent. On this first we will take cash in hand, which will be 1,20,000. Then we will take bank balance, which will be 9,88,000. So if you take total of this, you will get 11,08,000. Then we'll go for 12th one. Short term loans and advances, and this A, staff advances. So staff advance is 1,70,000. B, advance tax, $24,000 less provision for tax, 22,000. So balance you will get is 2,000, and if you add with 1,70,800, you will get 1,72,800, right? Then we'll go for the next one. 13, other current assets, and this we have only one item. Preliminary expenses, amortizable within 12 months. $53,200. Now we'll have to go and record all this information in the balance sheet. So let us go to the balance sheet. Balance sheet, we will go, and first thing that we are going to record is the share capital. So share capital we will say is 40 lakhs. Then reserves and surplus, the total of reserves and surplus is 6,40,000. Then long term borrowings, by the way, share capital plus reserves and surplus will give you shareholders fund, so it will be 46 lakhs 40,000, and long term borrowings the total of long term borrowings is 7 lakhs. Then we have trade payables. So our trade payable is 2,10,000. Then other current liabilities, it is 80,000. Then short term provision, it is 2,40,000. So total of this, total of current liability will be, let us calculate, 2,10,000 plus 80,000 plus 2,40,000, 5,30,000. So now we'll have to take the total. $46,40,000 plus 7 lakhs plus 5,30,000. So total we are getting as 58,70,000. 58,70,000. So that we can record as total. right? Now let us record the values of the asset. So non-current asset, fixed asset, the value of fixed asset is 24,70,000. Non-current investment is 1,50,000. So total of this will give you 24,70,000 plus 1,50,000, 26,20,000. 26,20,000. Next, inventories, the value is 10 lakhs. Trade receivable, the value is 9,16,000. Cash and cash equivalent is 11,08,000. Short-term loans and advances is 1,72,800. Other current asset, it is 53,200. So if you take the total of this, let's see, 10 lakh plus 9,16,000 plus 11,08,000 plus 1,72,000 plus 53,200. So that is giving you some mistake from my end. Let me calculate once again. 10 lakh plus 9,16,000 plus 11,08,000 plus 1,72,000, 1,72,800 plus 53,200, 32,50,000. 32,50,000. So now if you take the total of this, 32,50,000 plus 26,20,000, we are getting 58,70,000. So our balance sheet is telling. Right? Let us go for the next question. Following is the extract of the trial balance of Mittal Limited as on 31st March 2015. You have particular rupees column, sales 2 crore 40 lakhs, opening stock of raw material 20 lakhs, opening stock of finished goods 10 lakhs, purchase of raw material 54 lakhs, purchase written 4 lakhs, sales written 40 lakhs, dividend received 10 lakhs, sundry income 8 lakhs, freight on raw material 60,000, salaries and wages 8 lakhs. Bonus to employees 1,60,000, directors remuneration 16 lakhs, depreciation on plant and machinery 10 lakhs, furniture and fixture 6 lakhs, motor vehicle depreciation on motor vehicle 2 lakhs, so total depreciation 18 lakhs. Interest on loan from Bank of India 14 lakhs, repairs and maintenance expenses 1,60,000, insurance premium of office premises 60,000, electricity charges 80,000, rent, rates and taxes 40,000, audit fees 1 lakh, advertisement expense 2,40,000, sundry expense 20,000. Additional information: A, closing stock of raw material and finished goods was 10 lakh and 12 lakh respectively. B, outstanding salaries and wages were rupees 1 lakh. C, salary income receivable was 50,000. D, 50,000 to be provided for bad and doubtful debt. E, prepaid advertisement expenses were rupees 40,000. F, make a provision of income tax of rupees 4 lakh. Prepare statement of profit and loss account ended 31st March 2015 as per the provision of Companies Act. So now closing stock of raw material and finished goods is 10 lakh, 12 lakh. Fine. Let us record. Now what we'll have to do, actually we'll have to prepare the statement of profit and loss account as per Companies Act 2013. So let us prepare. Solution. Mittal Limited. Statement of profit and loss for the year ended 31st March 2015. Particular note rupees. In this first we are going to record the revenue from operations, note number 1. Other income, note number 2. Then we will say total revenue. Then third, plus expenses. And this first will be cost of material consumed. It will be note number 3. B, changes in inventory of finished goods, note number 4. Employee benefits expenses, note number 5. Finance cost, note number 6. Depreciation and amortization expenses 7, other expenses 8. Fine. Then you will get total expenses. So after this you will get fourth as profit before tax, okay, that will be total of revenue minus total of expense. From this you will subtract provision for income tax, so you will get profit after tax. Now let us prepare notes to account. Particulars rupees. This first revenue from operation, and this first we're going to take as sales. Sales given in the question is 2 crore 40 lakhs. From this you will have to subtract sales revenue. It is given in the question as 40 lakhs. So once you subtract this, you will get 2 crores as revenue from operation. Second, other income. This first you are going to take dividend received, it will be 10 lakhs. B, sundry income, ₹8 lakhs. Add sundry income receivable as given in the adjustment. So if you take the total, you will get 1,50,000. So total other income is 18,50,000. Third, cost of materials consumed in this first. Opening stock of materials, ₹20 lakhs. Add purchase of materials, that is 54 lakhs. Less purchase items, that's 4 lakhs. So your net purchase will be 50 lakhs. Again you will add freight on raw materials, it will be 60,000. So now if you take total of this, you will get cost of material consumed, which will be 70,60,000. Fourth, we'll go for next item. We forgot actually one thing. We will have to, we have closing stock, so we'll have to subtract closing stock as well. Yeah. So we will have to subtract closing stock. Actually, I forgot closing stock. It is given in the information or additional information. Closing stock of materials, it is 10 lakhs. So if you subtract this, the final amount will be 60 lakhs 60,000. Okay, now we can go for the next item, that is the fourth one. Change in inventory of finished goods. This first will take opening stock of finished goods. So opening stock of finished goods is 10 lakhs. From this we will subtract closing stock. So we will record a closing stock as well, 12 lakhs. So the difference which we are getting is net increase in the inventory of finished goods. Now we can go for the fifth one. Employee benefits expenses, and this first we will take salaries and wages, which is 8 lakhs. To this we will add outstanding salary and wages, which is 1 lakh. So order column will be 9 lakh. B, bonus to employees, it is 1,60,000. So total employee benefit will be 10,60,000. Alright, now let me just increase the size of the columns. Sixth, finance cost, and this we are going to take interest on loan from Bank of India. We have only one item in this, so directly you can take in the outer column as 14 lakhs. Seventh, depreciation and amortization expense. In this we will take depreciation on plant and machinery first. So depreciation on plant and machinery is 10 lakhs. Then furniture and fixture, that is 6 lakhs. Then we have motor vehicle, which is 2 lakhs. So if we take the total of this, 10, 6 to 18 lakhs as the total depreciation and amortization. The next will be 8 other expenses. Other expenses, and the first item that we are going to take is director's remuneration. director's remuneration is let me prepare one more column. Director's remuneration is 16 lakh. B, repairs and maintenance expenses that is 1,60,000. C, insurance premium is 60,000. D, electricity charges 80,000. E, rent rates taxes 40,000. F, audit fees that is 1 lakh. G, advertisement expenses it is 2,40,000, but there is an adjustment. What is that adjustment? There is a prepaid advance advertisement expense, so that we will have to subtract. Prepaid advertisement expense so it is 40,000. So if you subtract, you will get 2 lakhs. Then H, we have sundry expenses which is 20,000. I, provision for bad and doubtful debt that is 50,000. Now let us take the total of this. 16 lakh plus 1,60,000 plus 60,000 plus 80,000 plus 40,000 plus 1 lakh plus 2 lakh plus 20,000 plus 50,000. So that will give you 23 lakh 10,000. So record here 23 lakh 10,000. Fine. Now let us record all this thing in the main solution. So revenue from operation is 2 crores and other income is 18 lakh 18,50,000. So the total revenue will be 2,18,50,000, right? Cost of material consumed is 60,60,000. Then changes in the inventory of finished goods, it is minus 2 lakhs because it is in excess. Employee benefit expenses 10,60,000. Finance cost 14 lakhs. Depreciation and amortization 18 lakhs. Other expenses 23,10,000. So if we take the total of this, 60,60,000 minus 2 lakhs plus 10,60,000 plus 14 lakhs plus 18 lakhs plus 23,10,000. So we are getting 1,24,30,000. 1,24,30,000. So now if you take so total expense is 1,24,30,000. So you if you subtract the total expense from the income, you will get profit before tax. So let us do that. Minus 2,18,50,000. So that is giving us